All right. Hello, I'm April Hugh with Century 21. Are you looking for life insurance?
Do you know the difference between whole term and... No, I don't even know the difference.
Term
Thank you.
and whole life. The difference.
Excuse me.
Yeah. All right.
If so, stay tuned. We have Gary Wyatt here from National Life Insurance Company. Welcome.
Yeah, welcome,
Well,
Gary.
thank you. A pleasure to be here, and I appreciate you both asking me here.
Yeah, thanks.
Now, how long have you been with this company?
This company, Security National Life, I added just last year. I've been in the industry for over 15 years, and I have about a dozen different companies that I search for my clients for the best product and the best fit.
Okay, great.
Yeah.
So can you explain exactly, for our viewers, what exactly you do and what you search for and a little about your company?
Depending on what my client wants as far as, for coverage, depends on their age too. I always recommend if you're really young, you want to get the most amount of insurance possible, and that would be term insurance, because you just can get a lot more at term because there's no value in the term as far as cash value or a savings account or stuff like that. Where whole life, you do have some value, and I think we'll talk about that a little bit later.
Okay.
Okay.
All right.
So then there's probably a lot of factors that you look at as far as male, female, age, the lifestyle, things like that, in order to determine which direction to go with people, correct?
That's correct. The two basic things you just mentioned, gender, male or female, and your age. Females tend to live much longer than men, darn it, but I'll be an exception to that. And so again, your age, the younger you are, the less expensive life insurance is.
So then if you're younger and you start off with a term policy, you're making payments every month.
That's correct.
And then the term is established at the time that you take the policy?
Correct.
Okay.
Typically, there's like a 10, 20, or 30-year term.
Okay.
And it's great. You can buy a lot amount of term insurance for a specific or specified amount of time. But the problem is, at the end of that term, you have to re-qualify for the next term.
Gotcha.
And you might have had some life medical events, heart attack, stroke, diabetes set in, which are all factors that increase your cost.
Oh.
Okay, so
Wow.
it could change dramatically after each term ends?
Exactly.
Okay, so what would you
And the
recommend?
other thing too is you're 10 years older or 20 years older.
Yes.
Right, so
So
it's
your
gonna be
cost
more.
went up. So there's no fixed rate because the term terminates.
So could you do like a 30-year term?
You can do a
or-
30-year term.
I see.
Let's say you're 25. So what are you going to do at 55?
Right.
So is there a benefit to term over?
There is a benefit
whole
to
life?
term, as you can buy a lot more term as opposed to whole life.
Okay.
Whole life, I think we're going to talk about that in a minute.
Okay. All right. So back to term. So when you qualify someone, I remember getting it years ago that someone comes out and takes your blood and you get the medical record so you can, all of that. Is that what you guys do?
Yeah, that's called a medical exam, to qualify for an amount. If you're applying for $25,000, it's going to be a paper application and medical questions.
Okay.
There's no need for a medical exam.
I see.
If you're applying for $250,000
Uh-huh.
and given your age, they require, just a paper application. No, we need to do MIB, Medical Information Bureau background check. The MIB has more information than the FBI. So they know every time you went to the doctor, every illness you had, and so on. So,
Wow.
so so that is, what was the question again?
Just to have your so
Okay,
you have to-
medical
how do you have
exam.
to
Yeah,
qualify?
the higher amount of insurance, the higher risk for the insurance company. So they want to make sure that the risk that they're signing for, they know absolutely everything's going on with you.
Gotcha.
So let's say you're 50
Okay.
and you want to do term and you want to do 30 years. Is
At
that even the smart thing?
Yeah, at 50, I don't know that we can get a 30-year term on a 50-year-old.
Okay.
That takes you up into
Okay.
80. So you're definitely going to get a 10-year. And there's most likely there'd also be a 20-year term available.
So it kind of sounds to me like you're at Vegas and you're gambling whether or not you're they're gonna expire during that
Well,
time frame.
that's a true definition of insurance, is a transfer of risk. Okay, if you go to Vegas, you're putting the risk on the slot machine that is going to give you the money. With insurance, you're transferring for a small monthly premium that risk to the insurance company.
Right.
So to assume that risk, they want to make sure everything's cool with you.
Okay.
So is this, say you had a 10-year term or what have you, and say that the person wants to cash out after they've had a couple of terms with you. And I mean, do you cash out where people can?
Okay, I'll put it in your terms.
Okay.
Talking about housing. If I rent a home from you, let's say that you own a home and I rent it from you. At the end of my 10-year rental, do I have any value that you're getting back to me?
No.
Nope.
It's the same thing with term insurance.
Okay.
You're renting the insurance. There's no value there unless you cash it in, and you've turned the chips in.
But it's less expensive than whole
It's
life.
less expensive
Okay.
than whole,
Okay.
but there's no return on it. So for younger people, I try to get them to do a combination. Let's say they have $100 to spend a month. Let's put $75 towards a term that'll get you close to 1.5 or 2 or even $3 million term insurance.
Okay.
And let's take out a $25,000 whole life policy, which will start to build cash value. And there you have value.
I see.
Okay. And as the kids grow up, the kids go into college and stuff, then you might want to back off in the term and put more money into whole life
Yep.
to build towards retirement value.
Got it.
Okay. Well, let's switch gears then.
Yeah.
Can you explain the whole life, please?
Yes.
Okay, let's go back to your world too and your industry. I could either rent a home or I could buy a home.
Right.
If I buy a home, I'm building equity.
Right.
The same thing with whole life insurance. With whole life, you have a higher premium, but you have a return on your dollar. You have cash value.
Right.
You're not going to get as much, but you're going to have something at the end of 10, 20, or 30 years. The other two things, one, you lock in your age. Two, you lock in the rate. It can never increase on you. They can never cancel on you. And the one thing that a lot of people don't consider and insurance agents don't consider, you're securing your insurability.
Okay.
Remember we talked about 10 years. Okay, now you have to reapply and you may not qualify for that
Right.
same rate. Okay, but with whole life, you lock in that insurability. And that's another reason why I encourage parents to get insurance on their children, because you don't know if they're going to be diagnosed with diabetes at the age 12. Okay, now they're going to have increased life insurance rates for the rest of their life, unless you bought them a child policy at age 1 or 2 or whatever. What you're doing, you're protecting their insurability. People, I don't want to get insurance on my child. Okay, like that's so weird. No, you're protecting their insurability.
Okay.
So then, if you get a whole life policy and you're in your 30s, and then you have you can do a long length of time, right?
You can have it for
30, 40, 50 years.
You can have it to age 100
Okay.
Okay.
and beyond, because typically most plans you stop paying premiums at age 100.
So then it's going to be at one price when you're in your 30s, and then will it continue to, but you said it doesn't change.
It doesn't
Right,
change.
for
You've
the
locked in
whole
that
life.
rate.
Yeah, you lock in everything basically.
So the
the
best
whole
thing
life.
to do is to do it when you're younger.
Absolutely.
For the whole life. But so say you're 40. Would you recommend looking at a whole life versus?
Absolutely.
Okay.
At age 40, your children are probably in their late teens or mid-teens, and you probably got a very secure employment, and you moved up in your income level there. You probably have your cars close to paid off, so you're going to have some more of this spendable cash, expendable cash that you can put towards a whole life policy. It's like a forced savings account as well.
Okay.
So let's say that something does happen when you have a whole life policy and your spouse passes away unexpectedly. And then is your mortgage then covered, or you just take the money and you do with it what you wish?
Exactly.
Okay.
But let's say when we sat down and we designed the program for you, we wanted to cover the mortgage, we wanted to cover the debt on the cars, and because let's say it's a one income family, just the husband works, he passes away. His desire was to make sure his wife never had to work. So we designed a program that the cash benefit when she receives it will allow her to do that. Okay, she doesn't have to pay off the house. She has a nest egg here that she could pay off the house, or she could just keep the money, put it in IRA or whatever, and then just make monthly payments on mortgage if you want to do it that way.
gotcha.
So it's your money, you do with it what you want.
Okay.
It works. Okay, got it.
That's good.
Interesting.
Yeah.
Wow. All right, and then
So does the whole, sorry, April, does the whole life, do you have to do the blood tests and all that too?
Again, it depends on your age
Okay.
and the amount that we're applying for.
Okay.
Again, it's the risk factor that the insurance company wants to know what kind of risks they're going to have. Based on that risk investment or investigation they do,
Right.
they'll determine what rates you qualify for. Okay, so let's say that 10 years ago you had cancer. A lot of times insurance companies, okay, that was 10 years ago, but it was last year?
Might
no,
be a
you
little
have a
risky.
5-year wait,
Yeah.
before.
Right.
So they want to know all the variables to determine your rate.
okay, so what I was going to ask is if you can give us like kind of a hypothetical example of, say, a 25-year-old that wants, say, maybe a specific amount of money and does a whole life. What kind of example could you, just so we can kind of grasp
Like payment wise?
payment wise and what, like, if,
Okay, married,
no, single
single,
and male.
male?
Yes.
Okay, so he has really no responsibility other than to cover his burial. Okay, Social Security pays you $255. Okay, woohoo, so what? So what I would encourage him, looking at his profession, let's say that he's in a very secure profession, let's say he's a banker or something like that. First thing he's going to throw at me, I've got a lot of life insurance here with the bank. Is that transferable when you leave that bank? Can you take that with you? Usually it's not.
Oh, okay.
Okay, and I always tell people, I said, do your homework. I think we met with, was your coworker that we met over at Starbucks?
Oh, Megan.
Megan.
Oh,
Yeah.
We met with Megan. Her homework was see if your husband's insurance transferable, see if you're on it and the kids are on it, and so on. So with your 20-something year old, I would see how much money that he needs to live on and how much he can put away towards a plan. Because he's so young, I would highly, highly, highly recommend that he gets a whole life policy now for as much as he can afford today, next year, and 10 years from now. Okay, and he can continue to add to that whole life policy. So that when he's 30, he gets married. Now he has a wife. When he's 35, he has a wife and through 2 kids. Each point in that change of life for him, I want to see him do an annual review of his plan and increase his value. Now, because he's already done whole life, we add some to that. But now we might want to couple that with a high term policy now that he has a wife and 2 children.
Okay.
High term policy?
Yeah, not a high volume, like a 1.5 or $3 million term policy.
Okay.
So now he's got 2 plans. He's got the whole life plan as a savings, and that's continuing. That's his home he owns, and now he needs to rent.
Just
some
a little
insurance
bit,
with
yeah.
the term.
I like
gotcha.
that.
Yeah,
I
I
didn't
do
know
too.
there was it really a different. I mean, I didn't really know, and now and just kind of you mix and match to what.
What your needs are. Yeah.
Exactly.
Okay.
And the biggest problem with people with life insurance is they don't know what a life insurance agent looks like.
Oh, well, you're right here.
Exactly. we know what a doctor looks like when we see his stethoscope, his nurse, we know a fireman because of his uniform. We know a police officer or a sheriff because they're uniformed. But it's hard to find an insurance agent unless you go out and look for it. Most people don't. When they go looking for an insurance agent, is like when the house is burning, they want more fire protection.
I know.
No, it's burning.
It's too late.
Yeah, or they've had a life medical incident, and now they're starting to look for we can write the insurance, but now you got to wait because they'll have a lot of insurance companies put a 12-month disclaimer on, let's say that you're just diagnosed with hypertension or something like that. So if that were to come down and controlled, then they might reduce your rates. But again, signing up for something when you're young is much better.
Well, and then he also does short-term disability. So if you're out sick and you can't work, that was another thing.
And taking that a little bit further, because people are out sick like 3 or 4 days, so what? But let's say you're out sick and it turns into pneumonia and you're off 3 months. Okay. 1 month, you got the savings and stuff, you can, not go to Starbucks every day, but so let's say you're out 3 months. That's where your short-term disability comes in. And it's not so much to replace your income, it's just to maintain
Supplement,
everything
yeah.
on the status quo.
Yeah.
Yeah.
Now that you don't have to pay that back because you're insured with that. So that's
Exactly.
Okay.
Yeah, that's your money. Spend it however you want to.
okay.
Do they base it on what your past earnings were?
Yes, they look at your annual earnings, and you can get up to close to 63% because if at some point you may coordinate also with Social Security Disability. So you cannot have more than what you would. I think it's 62 and two-thirds. You cannot make more than 62 and two-thirds percentage of your annual income. Otherwise, we'd go out, get this disability policy, and we're making 3 times what we'd make if we're at work.
Yes. Yeah.
So
yeah.
there's safeguards on that.
Now you had also real quick, you had mentioned about like a cancer policy then too.
Okay, now you're coming real close to home. I love talking about cancer protection because cancer's gone blind. It doesn't matter whether you have family heritage that my aunt had it, my mother had it, now I've got it. I had cancer in '99. My wife was just diagnosed with cancer last year. Both of us are free and clear. With the cancer plan that I didn't know about, had I had it, I took their brochure and went down every single line item of what I had done. Comes out that the company would have paid me $30,000. Now, these cancer plans don't coordinate with major medical. They pay in addition to,
Okay.
not instead of. So in addition to, that $30,000 was mine to put in my pocket to cover my income because I was off work for over a year. My wife had to take off work, but she had to take care of me because I had 119 pounds at the peak of my cancer. Last year, I was taking care of her.
Right.
She did have a cancer plan, and it paid out $10,000 to her.
Is that something you should probably get when you're younger too? And just like an unknown, it doesn't matter?
It's always better
Okay.
when you're younger to get these types of plans.
Yeah,
because,
that makes
again,
sense.
you're locking in a rate that's much lower,
Right.
and you can have it forever and goes, I'm never going to get cancer. The cancer rate for men is 1 in 2. Women, it's 1 in
Jeez.
3. Okay. So neither of you are going to get it because the third one over there got it.
There we go.
It's not a pleasant thing, but those are the numbers. We're under so many environmental pressures. COVID's hit us now. It's not hereditary. So all these things that are going on. So.
Wow, well, great information,
Yes.
Barry. Anything else that you would like to add to some
No, you guys had some really great questions. Yeah.
So if someone would like to get a hold of you for more information,
Okay.
what's your number?
805-698-5222. Again, that's 805-698-5222. Please leave your name, phone number, and best time to get back to you, and I certainly will.
Okay,
Fantastic.
awesome.
Thank you so
Thank you
much.
for all the great information.
All right. Thank you for
And
having
if
me.
you'd like to reach me, my number is 805-878-5056.
And I'm at 805-714-8124. Thanks for watching.
We'll see you soon.
Bye.
Bye.